Hi there and welcome to weekly Forex Forecast with TFX at Profit Points. This week we're going to be looking at GBP USD, USD CAD and WTI. Before we get started, I want to encourage you to hit the like button and the subscribe button on this channel so that you can be notified anytime I release important videos like this. I may also want to encourage you to share this video because you may not know whom this will be of help to in their journey into the world of trading. Alright, let's get started. So last week I shared this classic explanation on the last two candles for this pair. I did explain the appearance of a double pin bar caused by the upper boundary of this multi-year wedge, right? And they're also caused by the 200 EMA, right, appearing right above the candle, right? I also gave out a topical video on how to spot reversal ahead of time, which was a sequel to the last week's video, right? In that video I did mention that the second pin here was almost being blurred out of the view of a casual trader, and that the pin is going to reappear, right? Okay, so now that the second pin has reappeared and that this pin is going to reappear, right? And which was the reason why we took our sell positions that we did last week, right? And then we need to remember that I said that the profits on the sell positions will not be allowed to run for too long a period of time, because this is just a slight reversal. So going forward, as part of my opinion, I want us to look at the 4-hour charts right here and to see to what extent the retracement has gone and to what extent we expect it to go, or maybe it's going to stop retracing at that point. So I'm going to apply my Fibonacci retracement here to look at the run for the 2 weeks that are moved from upper week, right? This bullish movement here, right? So I'm going to put my Fibo there, right? I'm going to see the impact of that. Okay, now if you look at the Fibonacci here, that for this run, this 2 weeks run here, right, when we have this triple pin bar here, we have this retracement, right as a Friday back to test the 236 Fibonacci retracement level. Now if you observe this very well and we go to a lower time frame, we will notice that there was no single day of last week that was able to close below the 236 Fibonacci retracement. So now, based on that, I still want to hold on to my bullish bias on GBP USD. Key levels to watch. So by Monday, if GBP USD is unable to find its way back above this falling triangle, if it's unable to find its way back above this triangle, this falling triangle, and if it continues to trade right within this falling channel, then I'm not going to be surprised that the pair might find its way back into this zone here. GBP USD might go down to retest these previous supply zone, right, which it broke through, right, last 2 weeks, right? So it goes down there to retest that, then that might now give me new impetus to start buying up from there, simply for the fact that that would be a good region for the Fibonacci retracement, around the 50% Fibonacci retracement. And also I believe by then the 200 EMA will also have been able to appear right at that point, which might give me new motivation to start buying up this pair from here. Alternatively, if you think you start buying up from here, right, then there is nothing wrong if it goes against you that you have the entry for buy positions at this point, right? You can easily book for the positions even ahead of time, right? Depending on your trading strategy, and also considering your risk reward ratio. USD CAD. This year's high for USD CAD was at 146.70 region, which coincide with 2016's high, right? Creating, interestingly, another top this year that is almost the same with 2016's high, and that is 4 years apart. All right. Okay. Since that time, it has so far been trading effectively below a downward trend line that took it into demand zone, right? Because when it encountered this zone in first week of June, it bounced back from it just as it did, right, around the first week of March, right, due to many reasons, to which pandemic is one of the reasons. Okay, but this time around in June, when it bounced back from that zone, it didn't last so much because it encountered a resistance ahead of the 138 region, right, which also coincides with 2017's top. And then since then we saw that it now gradually came down from that 138 region and back into the demand zone. Okay, now going forward, we noticed that the pair broke below, right, the demand zone last Wednesday, but interestingly, it looked like it's a false break, right? As we saw that it swiftly, right, went back above that zone by Friday. It went back above that zone. Now, signaling that there might still be significant tendencies that buyers might still be in control here. Now, here's my take on USD CAD for this week. Okay, now look closely at this on lower time frame. My take is this: if we couldn't on a daily time frame here, if we are able to have a daily close, that is a close on a daily basis above this boundary, upper boundary of the wedge pattern, then I might resume my bullish bias on this pair. However, if we saw the pair, right, retrace down, and for the second time, because of the closeness of the frequency here, for the second time, if it breaks again below the demand zone, then we are sure that we can follow that bearish movement. All right. WTI actually, as I explained some couple of weeks ago, that it played, right, with this bullish reversal flag, right, for like 2 weeks, right, about 10 days there, right, and then we've actually been waiting for it to break, that flag. Unfortunately for some people, it did this stop hunt here, right, and then right after then swiftly moved back into the the flag, and then broke the flag up to resume the bullish movement. However, last week, right, encountered the resistance at around that $43.50 region, where it was the last week's high, where it was unable to break that level, and then we saw that WTI retraced from there, right? Okay, going forward now, with my Fibonacci, placed here, drawing that right from the stop hunt level there, right, to the highest level it's reached, stop hunt level, right, 2 weeks ago, to the highest level it's reached last week. We saw that this retracement is at right now, bounce back from the 50% Fibonacci retracement level. Okay, so it's in my opinion, I think one can resume, right, bullish bias, right, at this point, right, with a view to having a re-entry at a lower level, right, of 618 Fibonacci retracement level, right, such that if you enter at this point, right, on Monday, right, and then it goes against you, a good place to re-enter will be the 618 Fibonacci retracement level, which will be, just around that $40 60-cent region there. Okay, all right. I also believe the instrument is going to start moving up from there, because it's possible that the 200 EMA would have also appeared right below the candlesticks, around that 618, Fibonacci retracement level, thereby creating a sort of confluence of support, at that point, right? Adding to the confluence of support also will also be the upper boundary of that, flag, which can also be acting as a support. So at that point, we have the upper boundary of the flag, we have the 618 Fibonacci retracement level, and we could possibly have the 200 EMA also appearing at that point, creating a confluence of support by which we can now start buying up from there. Now, let me allay your fears. People are thinking about COVID-19 second wave of the pandemic and all that, but I've always been sharing my opinion on this right from when crude oil crashed, that you cannot continue to sell a product for an extended period of time below the production cost. You can sell a product below production cost for some time, right? But they can't continue to sell below the production price for an extended period of time. And this is what my own bias and fundamental view, right? Why myself and a couple of traders, right, that are with me have been staying bullish, right, on WTI crude oil. Okay, all right. So thanks for watching this TFX at Profit Point, and I'll see you next week. Bye.